Good afternoon, everyone. Thank you for joining us for today's webinar. We will hear from Extension Farm Management Specialist Dr. Courtney Burr as she discusses keeping better financial records. You may ask questions during the webinar through the chat window by clicking the chat button at the bottom of the screen. After her presentation, you may also ask questions by unmuting your microphone. Our next webinar on winter nutrition for livestock will be February 27th at noon. You may find more farm management resources on the eFarm Management page, and I will share this link in the chat window. Dr. Burr, I'll turn it over to you now.
Great. So we only have a short time together today, so it is going to be a little bit like drinking out of a fire hose. If you have additional questions or you would like some more information, please reach out to me after the Zoom or ask questions. I'm willing to hang around for a little bit too. Okay, so when I talk to people about record keeping, really the first thing I ask them is, what do you mean? So a lot of people have different ideas about what record keeping really is. You have production records. Those tend to be a little bit more fun. Those are the records you talk about at the coffee shop, right? You have your records for taxes. Those are things that we have to do. It is a great place to get started. And then there's financial analysis and planning, and that is more of what I do or help farmers do. And then it really comes down to, what are your goals? So obviously the gold standard would be to keep records on absolutely everything, but that's just not feasible for most people. And so if your goal is to improve your cow herd in terms of pregnancy percentages or something like that, then keeping really great production records on those sorts of things are important. If your goal is to minimize your expenditures on things like feed, keeping records related to your input costs would be the best thing to do. So general considerations, you need to make time for record keeping. You have to determine which information is economically feasible to collect. I say economically feasible, but also for your own sanity, right? Summarize the data for use in the decision-making process. So this is huge. People sometimes keep records and they just kind of wipe off their hands and they said, great, pat on the back, I kept my records this year. Records are only helpful and useful if you're actually using them to compare yourself to other farms, to compare your success year over year. If you just keep the records and then put them on the shelf and never look at them again, that's not really helpful. And then no records needed for programs you are enrolled in. So if you are enrolled in an FSA program, if you are participating in a grant, all of those sorts of things may have specific records that you need to report on at the end of the year to stay active. So if you aren't keeping track of those things, you can get in trouble or maybe not get your money or things like that. So keeping a list of records that are needed for those sorts of programs is really important. So when should you focus on records? You need to set aside a time for record keeping and keep to that schedule. So once a week is best, once a month is okay, once a quarter is really a bare minimum, and once a year is just not enough. If you're trying to sit down and remember what you did for the entire year and you have piles and piles of receipts and checks and everything, you're going to get really overwhelmed and your records are probably not going to be correct and you're going to get frustrated and you're going to quit. So personally, I think it makes a lot of sense to set the goal to be once a week. And if you fall short on that once a week goal of updating your records, then you're still going to be within that once a month range, which is really kind of the best option. Who should be doing this? So it makes sense to have one person in charge of maintaining the records. Having said that, it really needs to be a team effort. So it doesn't have to be the same person that's in charge of production records and in charge of finance records. So if you have one person, maybe, if you're a cow-calf operation that has a livestock background, having them in charge of production. And if you have a person that has an ag econ background, making them in charge of finance makes a lot of sense. Or if you have a person that just prefers numbers, or a person that just really gets into the data of crop yields and things like that, splitting up that labor is perfectly fine. But everyone needs to take ownership of the record keeping system. So all individuals involved need to do their part to maintain the records. This means letting the record keeper know about items that need to be recorded, bringing in all receipts from the truck. I know it sounds like it should be easy, but it's very hard, right? It gets piled up. You'll get to it tomorrow. You'll give it to them later. And then the person who's in charge of records gets frustrated because they have 2 or 3 months of wadded up receipts in the bottom of a truck. Encourage that person instead of discouraging them. And remember that it's a partnership, not a dictatorship. So everyone needs to be on board with keeping good records and understanding why it's important for the health of the farm or ranch. Okay, what do good records offer? Cold, hard facts. If you've ever tried to keep a food diary or anything like that, or an exercise diary in your personal life, and you look back at what you did in that previous week or that previous month, you tend to kind of leave off the ice cream cone, or the day that you skipped the gym. The same thing happens when we're trying to keep production and financial records. We kind of look back with rose-colored glasses and think we're doing better than what we actually are. And if you actually have the records that you've kept, it just gives you the cold, hard facts to look back on. It also gives you the ability to compare to benchmarks. So unfortunately, we don't have benchmarking in the state of Oklahoma, but we can compare ourselves to other similar states. Kansas has really good statewide records that we can compare our farms and ranches to. Insights into the strengths, weaknesses, and problem identification. So if all of a sudden your margins are getting very tight, and you look back year over year and your feed costs are incredibly high, then it might be an opportunity to kind of take back control, talk to people over in the animal science department, come up with a different ration, maybe get your feed truck calibrated. It just kind of helps you identify where the leakages are happening in terms of profit. And that kind of goes towards identification of profit and loss centers. That also applies to different enterprises. So your overall farm health may look fine, but it could be your custom cutting that is actually subsidizing non-profitable cattle, or it could be the reverse in your situation. So if you look at each enterprise individually, it helps you realize if one enterprise is consistently failing year over year, and maybe it's time to have a discussion about how to make a correction, or it may be time to let that enterprise go. And then documentation to obtain and maintain credit. So this is often a really strong motivator, right? You need to have records when you go to get a loan. And that's fine if that's your motivation. Really, it's about getting into the habit. So what do good records offer? So information regarding the feasibility of new ventures, employee incentive measures. So if your overall goal is to improve calving, or minimize the amount of fertilizer you're putting on, or something like that, you can make that a goal for your employees. And if they reach that milestone, maybe they get a bonus, or the savings that you have can go to your employees. There's a lot of different ways, once people have kind of bigger operations, that they use this information to kind of incentivize employees. And then guidance on appropriate risk management strategies. So there's production risk, and then of course there's financial risk. And a lot of times those go hand in hand, but you have to look at them separately as well. So questions that record keeping can answer. So we kind of talked about, one enterprise really propping up another. So am I making more money on crops or livestock? Should I buy or raise hay? Are my costs of production too high? What is my break-even crop price? It's really hard to take risk management strategies if you don't know your break-even price. And the best way to figure out your break-even price is to have your own numbers to work with. What can I do if I want to be more profitable? What can I do to provide incentives for hired help to do a better job? And then what kind of risk management strategies should I be using? So taxes can be a really strong motivation for record keeping. But I will get on my farm management soapbox for a second and just say that tax management is only one part of farm management. So minimizing your taxes is kind of between you and your tax professional if you work with one, but that is not necessarily profit maximization. So I understand the motivation to minimize taxes and do those sorts of things, but I also think it's important to look at the financial health of the farm outside of taxes to make sure that you are operating at a profitable level. Any kind of record keeping is a good start to financial analysis. So I'm not going to say, I don't care about what you're doing for your taxes. If you're keeping records, we can just make sure to look at it under the lens of kind of decision making and farm management and leave the tax part up to the tax professionals. Tax records, you should keep records for 3 years. You do not report income that you should report, and it is more than 25% of the gross income shown on your return. You need to keep records for 6 years. You do not file a return. You need to keep your records indefinitely. If you file a claim for a loss from worthless securities or bad debt deduction, you need to keep your records for 7 years. Keep all employment tax records for at least 4 years after the date that the tax becomes due or is paid, whichever is later. Property records, keep those indefinitely. I would say if you have any questions about whether you should throw away a record, check with a tax professional or just be conservative about it and hold on to those records for a little bit longer if you're not sure if you can get rid of them yet. So production records. I'm going to have a couple slides on animal production records and a couple slides on kind of more crop-related production records. Production records help you evaluate the animal's performance. You need to use standardized records. It helps identify problems and it's easy to compare across groups. So if you calculate your weaning weight one way one year and then a different way a different year, it's going to look different, right? And so that's not great for comparison. So make sure that you're using the standardized records. We do have fact sheets on how to calculate all these different kinds of production records. We do have some of that information or almost all of that information in the cattle manual. So if you have that, that's a really great resource. Really one of the first steps is to individually ID all of your animals. Ear tags is a really normal, traditional way to do it. Names, also fine. You just need to have some way to identify that animal. Obviously, if you have like Black Angus or something, trying to remember a bunch of names of black cattle that all look the same can be really difficult. So as your operation expands, ear tags is really a traditional way to go. Production records for cattle, you have your pregnancy percentage, calving percentage, weaning percentage, weaning weights, adjusted weaning weights, pounds weaned per exposed female, calving interval, and death loss. Obviously, not everyone keeps all of these records, but this is just the general records that people try to keep if you're going to keep as many records as you can. So pregnancy percentage, this is the number of females exposed, diagnosed as pregnant, divided by the number of cows exposed times 100. So if you had 100 females that were exposed, and exposed just means the bull was out there with them. So 100 females that were exposed and 92 were pregnant, you had a 92% pregnancy percentage. Calving percentage, this is the number of babies born dead or alive, divided by the number of females exposed. So if we had 100 females that were out there with a bull, we had 45 males born, 45 females born, and 1 born dead, we would have 45 plus 45 plus 1 divided by our 100 females. That's 91% of a calving percentage. For cattle, you want that number to be above 90%. So in this made up example, that's really easy for my math, that 91% is doing well. So they're above the standard. So weaning percentage, so this is the number of babies weaned divided by the number of females exposed. So remember we had 100 cows. The calves born, we had 42 bulls and 42 heifers. And so we add those two up, divide by 100, and we get 84% as our weaning percentage. For cows, you want above 83. For goats, you want above 150%, because remember, goats can have twins. So the death loss is the number of calves that died, either born dead or died before weaning, divided by the number of cows exposed. So in this made up example, we had 100 cows exposed. We had one born dead of the calves, and we had 6 that died later. So our death rate was 7%. The standard for cattle is less than 5%, and the standard for goats is less than 10%. So for this example, this farm had a 7% death loss, which is a little bit high. So if this farm were keeping records and they've been doing great, and then all of a sudden they start to see this death loss creeping up, then it's something to look into. But if they hadn't kept these records, you look back and you say, oh, well, 3 years ago, I think we had 6 die or 5 die. It's really hard to remember. And so that's why keeping records year over year is super important. Okay, so pounds weaned per exposed female. So again, we have 100 females that were exposed. We had 42 bulls at 452 pounds. We had 42 heifers at 418 pounds. So we multiply that out, divide by our number of females exposed, and we have 365.4 pounds as our weaned per exposed female. For cattle, you're looking for that number to be greater than 450 pounds. For goats, there's not really a standard out there. Maybe some grad student can work on that, but this particular farm is a little light. So it could be maybe they need to work on their nutrition program. If we're assuming this is the same example as before, they had a higher number of dead calves. So that could be impacting this number. But again, if they didn't know they had a high number of dead calves, it would be hard to kind of piece out why this number is lagging behind the standard. And so that's why we do recommend keeping, that long list of production records. But I understand that not every farm has the ability to weigh all their animals, and there's other issues that happen. So keeping some records is better than keeping no records. So what should you use to keep records? I get this question a lot, and it's very difficult for me to answer because each farm has their own needs. There are a lot of really fancy software options. We updated the list. So this fact sheet, I'll give the number for the fact sheet in the next slide. And we can also email these fact sheets out that were mentioned today. But software ranges from $58 a year to $950 a year. One thing to consider if you're choosing a software, consider commercial versus seed stock needs. So if you're a seed stock producer, your breed organization may have certain records that you have to keep. Consider the level and the cost of software support that will be provided by the company. So if you go with the cheapest option, if you have a problem and you can't figure out how to use the software, they maybe don't have the best support. So looking into what kind of support they offer, if you're not a big tech type person, having that support from the software company is going to be important to you. And then consider specific cattle information that is required by the software. So if you can't move on to the next record without putting a weight and your farm doesn't have a scale, this is probably not the software for you. You don't have to use fancy software. You can make your own Excel sheets. You can keep it in a notebook. You can put it in Word and print it out. It really just needs to be whatever works best for your farm and that you will actually use. If you find the software to be difficult or you find that it's too complicated to use, so you just give up and stop, having a spiral notebook with all the numbers written out, having a simple Excel that you just type in, having a notes page on your phone, whatever works for your farm. And so this is why it's really hard for me to say, oh, this is the one that you should go with, because it's such an individual need issue. So this is the fact sheet that has a huge list of cow-calf production record software. It's CR 3279. We have kind of a checklist of what all of them offer. So that may be a good place to start if you want to go with the software option. So why do we care about this? Like, what am I actually going to do with this? Sure, I can compare my own records year over year, but we also have some records from across different states. So this is SPA data from New Mexico, Texas, and Oklahoma. And so this is the average weaning weight for high profit farms, medium profit farms, and low profit farms. And so what you can start to do is compare where you're at. So the high profit farms, they had the highest weaning weight. But what I think is interesting about this data is the second highest weaning weight is this low profit group. And so maybe that low profit group is overfeeding their cattle. Maybe, they're using really expensive feed to get to that $4.99 and it's not showing up in the actual profit. So one number doesn't really tell the story, but this is an interesting way to kind of compare where your farm is. This is cow-calf cost of production. So what you can see here is that low group is spending a lot on feed. They're spending a lot on pasture. And they're also, vet med is pretty consistent. The high group spends a little bit more on vet med. So you can kind of look through here and see where you fall. Again, each farm is unique. So, even if you're spending a little bit more on vet med or something like that, that may just be the region you live in. But it is nice to see how this cost of production is just so high for that low group and kind of where that's coming from. And you can compare where you fall within this. So production records for crops, crop information, so variety, planting date, yields, population planted, planter settings, that's all great things to keep. Soil test summaries, nutrient planning, nutrient applications, pesticide use, labor. I think labor is something that really sneaks up on farms of all types. It's really hard to keep track of, especially if you're a sole proprietor. You don't even realize how much you're working, but it is important to keep track of so that you can have clear records of, what's going on in your operation. So we have recently updated the crop and forage record keeping app information. It's similar to the cow-calf. It's a big list. It has pros and cons for all of them. I'm just kind of a check mark, go through this table and see which one fits best for your operation. So why do you want to do this? I hope that everyone on this Zoom has goals for their farm. And in order to meet your goals, you need to know where you are today. And that's what record keeping can help you do. And then it helps you get to where you want to be and figure out how you can get there. So business analysis, we have financial statements, historical, maybe projected. You have a spending plan, which is a budget. If you are looking at adding a new enterprise, we have really great budgets available that you can start to kind of look at and decide if it's a good fit for you. Break-even analysis is super important when you're trying to lock in prices. Coming up with a marketing plan. Enterprise analysis. Is there one enterprise that is draining the rest of the operation? Investment analysis, risk assessment. So all of these things go into your business analysis. Financial records. 2 reasons to keep records: taxes. We all have to do that part. And then measuring your financial performance. This is the part that you don't necessarily have to do, but if you have goals, you're going to have to measure that performance to get there. So there's 4 main groups of records. You have income, expenses, assets, and liabilities. So your assets is everything owned that has value. So tractors, breeding animals, land, buildings, 4-wheelers. Liability is money that is owed. Notes to the bank, equipment dealers, agribusinesses, credit card companies. So the 3 main financial statements, and I could spend an hour on each one of these. So we're just going to go over it briefly so you kind of know, if you want to dig in a little bit more. You have your balance sheet. That is what is owned and what is owed. It measures your net worth. You have your cash flow statement. It measures money coming in and out of the operation for a specified duration. This is typically done annually. You have your income statement. This measures income and expenses, and it helps determine your profitability. So we have fact sheets that will help you do all three of these. We have an example farm that actually has numbers that are consistent across balance sheet, income statement, cash flow plan. So you can follow along with that farm and their numbers. And we also have blank versions that you can work through yourself. If you need any help with this, please reach out and we can talk through it. Financial performance measures, so liquidity is your ability to pay bills in a timely fashion and provide for unanticipated events. So that's your current ratio. Solvency is your ability to retire debts if all of the business assets are sold. So that's your equity asset ratio. Profitability is the financial performance of the farm or enterprise over a period of time. So it's your net income or your rate of return. Financial efficiency, efficiency with which assets generate income, and your repayment capacity, ability to repay term debt on a timely fashion. So how are we going to keep all of these records? You can do handwritten, so a ledger, a published record book. So there's like the Oklahoma Farm and Ranch account book that you can purchase and then write in your own things. Please not a shoebox or just random pieces of paper on the dash of your pickup. So if you are going to keep handwritten notes, let's try and compile them together. Computerized, there are several production record keeping programs available. You can use spreadsheets. You can set up your own spreadsheets and make them keep track of your records. Financial record keeping programs, there's Quicken, and then there's also QuickBooks. We have a new online course for Quicken. So if you've been interested in learning about Quicken or you're not as comfortable with Quicken as you would like to be, we have this class. It's $20. The money for all of these online classes is really just enough to keep the online class going, right? So we have to put it online and we have to have tech support and all these different things. So we're not really making a profit off these classes. You have 60 days to take the class, and it goes through Quicken specifically for farm and ranch financial record keeping. So if you're interested in that, you can sign up. And then we still have the farm financial planning program. So if you want to calculate all those ratios for your farm, if you want to get started with better record keeping and better analysis, we can help you with that. All you have to do is you can email me or sign up online, and we'll get you started with beginning and ending balance sheets first. Once you've completed those, we can work toward a whole farm workup. We're still doing this for another year. It is grant funded. Other states charge $5,000 for this service, and we're doing it for free. So if you are interested in that, please just send me an email and we can get your farm started. And I guess I'll open it up for questions. I know that was a lot really fast, but it's more about getting kind of the information out there and then also the resources that we have in terms of fact sheets and things like that. Any questions? You can also email me later if you have a question you don't want to ask in front of the whole group. That's fine.
I did share a link to the financial planning and benchmarking website as well.
Oh, perfect. Thank you.
Can you hear me?
Yes.
Do you guys only help out with people who are producing cows and goats? What about sheep and chicken?
Come on over.
Okay,
Yeah,
cool.
we're open for any enterprise. That's just our biggest clientele. So I tend to use those kinds of examples, but we actually have a fact sheet record keeping for haired and wooled sheep. separately with an Excel tool that you can use. So that is actually already built for the sheep people in terms of production records. So if you would like, if you can't find it, send me an email and I can get those fact sheets to you. Or if you have other questions, we do have a budget for backyard poultry, mostly for laying hens. I'll probably work on the quail and meat chicken soon. I won't give you a time, but soon I'll get meat, quail, and meat chicken done. Record keeping suggestions for beginning farms, small scale farms. I think beginning farmers have a great opportunity if they're, starting small, to have really strong record keeping habits. So I know it feels kind of weird if you only have, 2 cows or a couple of acres to be keeping all of these records, but I think that's the time to start. And it just becomes habit, right? So good habits start early. Keeping it simple. So if you are really small, something like written records or Excel records may be a better option for you compared to, some big expensive software that you don't necessarily need yet. But I do think record keeping for beginning farmers, ranchers, super important. It also helps. This is such a weird example, but during COVID, there was all of this funding that became available for farmers and ranchers. And the people who had their records already in place were able to have a first mover advantage and apply for those funds. I have no idea what's going to happen. I hope that COVID never happens again, but there may all of a sudden be opportunities for beginning farmer ranchers to apply for special funding or something like that. And those programs often have shorter windows. And so having your records in good shape so that you can go ahead and apply for those funds is a big advantage. So that's a great question, Hannah, but I think starting simple, Excel on paper. If you have questions, reach out. We're happy to help. We do have a new beginning farmer rancher specialist who's going to be all the beginning farmer ranchers' best friend. So he's really excited to get started, and I'm happy to make connections of people that need help with this sort of thing. Anything else?
I also shared a link to a webinar survey in the chat window, so please, everyone, fill that out and give us feedback on how we're doing. Thank you, everyone, for joining us today. Thank you for questions. Another thing I would like to remind everyone, we do have our next webinar on February 27th at noon on winter nutrition for livestock. So I would plug that one more time as well. Any other questions before I go? Since I'm not seeing or hearing anything else, I'm going to end the webinar now. So thank you everyone for joining us, and we will see you February 27th. Goodbye, everyone.